Hello, I want to welcome everyone participating in today's webinar, Understanding What's Next for SAS 145 and the 2022 Compliance Supplement. My name is Mike Larson, and I'm an audit supervisor here at GRF CPAs Advisors, and I will be today's session moderator. I'd like to start off today with some quick housekeeping items and explain what you will need to do to earn CPE credit. Participants seeking CPE credit today must complete and submit a short evaluation that will appear automatically following the webinar. You'll be asked to recall these words, or you will be asked to recall these words in order to receive credit. Please write down CPE words when they are given and hold on to them until you receive your certificate. They will not be provided again. If you have any technical questions or issues during the discussion, please use the chat function to speak with our administrator of assistance. The slide deck and recording from today's discussion will be available on the event page on our website. Today's learning objectives is to provide attendees with a better understanding of SAS number 145 and the 2022 Compliance Supplement. I will now introduce our speakers for today's webinar. Max Manley is an audit partner here at GRF. John McIntosh is a senior manager in the audit department, and Mac Lillard is also a senior manager on the Risk and Advisory Services team. Together, they have over 25 years of experience in the auditing and accounting industry. I'll now turn the presentation over to our speakers.
Thank you, Michael. Good afternoon, everyone. My name is John McIntosh, and the first part of today's webinar will cover Statement on Auditing Standards Update number 145. The full name of the standard is Understanding the Entity and its Environment and Assessing the Risk of Material Misstatement. This standard was issued by the AI CPAs Audit Standards Board in October 2021 and is effective for audits of financial statements for the periods ending on or after December 15th, 2023. This standard supersedes SAS 122, titled Overall Objectives of the Independent Auditor and the Conduct of an Audit in Accordance with Generally Accepted Auditing Standards. So what are the objectives of SAS 145? Ultimately, this new standard is all about the risk assessment process. It identifies the auditor's responsibility to identify and assess the risk of material misstatement in the financial statements. SAS 145 enhances the requirements and guidance on identifying and assessing the risk of material misstatement, particularly in the areas of understanding the entity's system of internal controls and assessing control risk. It also provides guidance and addresses the economic, technical, and regulatory aspects of the markets and the environments in which entities and audit firms operate. It is important to note that SAS 145 does not fundamentally change the key concepts underpinning audit risk, which is a function of the risk of material misstatement and detection risk. Rather, SAS 145 clarifies and enhances certain aspects of the identification and the assessment of risks to better drive risk assessments and therefore enhance audit quality. As we begin to go through the various updates, many of the areas will sound very familiar to a lot of people. And this is because the standard brings together a lot of the current best practices surrounding risk assessments and ultimately makes them requirements. So what were the reasons the Auditing Standards Board felt that this update was necessary in the first place? The first reason was due to the deficiencies in auditors' risk assessment procedures. This was a common issue identified by practice monitoring programs in the United States and worldwide. In 2022 US peer reviews, risk assessments were the leading source of matters for further consideration, constituting about 25% of all MFCs. The second reason was for the convergence with the International Standard on Auditing, or ISIS. Both the FASB and the ASB have been working towards convergence with international standards for a number of years on a number of topics, and SAS 145 was used to achieve convergence with international standards for the risk assessment. The third and final reason for the standard was due to general modernization. When the current risk assessment standards were written, many of today's technologies were not in existence. SAS 145 recognizes the increasing complexity of entities and auditing. It does so by highlighting audit methods and tools such as remote observation of assets using drones or video cameras, the use of data analytics software, artificial intelligence, and visualizing techniques to identify risks, and performing risk assessment on large volumes of data, including data analysis, recalculations, reperformance, and reconciliations. Now we'll take a quick look at some of the areas updated by SAS 145 before we get into the specifics of each one. The first big area is revised requirements to evaluate the design of internal controls. There's also new requirement to separately assess inherent risk and control risk, as well as some other new requirements for the actual assessment of inherent and control risk themselves. It offers revised definitions for the term significant risk. It gives new guidance on the scalability of audits and new guidance on maintaining professional skepticism during an audit. The standard also has a new stand-back requirement and, of course, revised requirements relating to audit documentation. And now to get into some of the specifics, the first significant section of SAS 145 relates to the revised requirements to evaluate the design of certain internal controls within the control activities component, and to determine whether such controls have been implemented. Like I said, many of these areas will sound very familiar to a lot of people. SAS 145 clarifies that in order to gain an understanding of an entity's internal controls, the auditor must evaluate certain aspects of each of the following 5 components of the system of internal controls. 1, the control environment. 2, the entity's risk assessment process. 3, the entity's process for monitoring the system of internal controls. 4, the information system and communication process. And finally, 5, the control activities. The auditor must evaluate and document these components in order to perform a proper risk assessment, which will then drive the nature, timing, and extent of further audit procedures. SAS 145 also offers some revised terminology on several key terms. For example, the term internal control has now been changed to a system of internal control, and the definition has been updated to reflect that it comprises the 5 interrelated components that we just talked about on the previous slide. Additionally, the definition of controls has been updated to be defined as policies or procedures that an entity establishes to achieve the control objectives of management and/or those charged with governance. The standard now has new requirements to separately assess inherent risk and control risk. While this requirement was not explicitly stated in the prior standard, it's something that many auditors were already doing. This was mostly driven by third-party vendors of auditing software tools that took the approach of a separate assessment of inherent risk and control risk. Nevertheless, the requirement to make the separate assessments of inherent and control risks is now baked into the auditing standards via SAS 145. You can assess inherent risk and control risk in a variety of ways. The standard does not specify a particular means for doing so. For instance, you might use high, moderate, or low, or a scale from 1 to 10 to define a level of risk over a certain assertion. The new standard does repeatedly highlight the idea of rating risk on a spectrum, so I do suspect that in the future we'll see more risk assessments done on a 1 to 10 spectrum rather than the traditional low, high, moderate scale that we're used to. There are also new requirements for the assessment of control risk. As has always been the case, if the auditor does not plan to test the operating effectiveness of internal controls, SAS 145 requires that control risk, or CR, be assessed at the maximum risk level. However, in that situation, the new standard requires that the assessment of the risk of material misstatement, or RMM, be the same as the assessment of inherent risk, IR. In other words, if control risk equals the maximum level because controls were not tested, then RMM must equal IR. Some people may remember a few years back that third-party practice aids changed the audit risk model whereby low inherent risk and high control risk equaled a moderate risk of material misstatement. The new standard now clarifies that that approach was not correct and is reverting back to the low, high, low approach. And from a practical standpoint, this will allow the auditors to have a more direct control over the outcome of the risk assessment. However, many audit areas that resulted in moderate RMM over the past several years will now be considered low risk.
All right, we have come to our first polling question. SAS 145 has a new requirement for the assessment of the risk of material misstatement to be the same as the assessment of inherent risk. In your opinion, will this change be beneficial for audit efficiency? A is yes, B is no, C is unsure. Please take a moment to now answer. While participants are submitting their answers, I'll provide the first CPE word. The first CPE word is control. If you want to receive CPE credit, please jot these words down because you will need them for the survey following the webinar. Again, the first CP word is control.
All right, it looks like 66% of people said yes, the update will result in enhanced audit efficiency. I have to agree. It does give the auditor more direct control over RMM in the cases that control risk is set at high. But however, it will result in some areas being considered lower risk than has been in the past. All right, moving on to our next slide. So under SAS 145, the ASB provides a new definition for significant risks. The new definition uses terms like likelihood and magnitude in conjunction with inherent risk, while not referencing control risk. It no longer requires a determination of whether a financial statement risk is a significant risk, but indicates that an identified risk of material misstatement at the financial statement level may have an impact on the assessment of a significant risk at the assertion level. The prior significant risk definition focused on the response to the risk, but not the risk itself. The old guidelines defined significant risk as a risk that needed special audit consideration. The new definition focuses on the risk itself, which, to be clear, is the risk of material misstatement. I previously mentioned how the standard often references assessing risk on a spectrum. SAS 145 also uses this concept for determining if a risk is considered significant. The standard notes that a significant risk is close to the upper end of the spectrum of inherent risk. SAS 145 also introduces the concept of scalability with regards to risk assessment. The concept of scalability recognizes that the size and complexity of an organization do not necessarily correlate. Smaller entities do tend to be less complex, but some are not, and larger entities tend to be more complicated, but again, some are not. So SAS 145 recommends that the auditor consider a number of factors such as the accounting system, the industry, and the internal controls of the organization when assessing risk. Complexity, not an entity size, determines how risk and response should be applied. Furthermore, some entities may lack formal internal control policies. However, a system of internal controls can still be functional. Therefore, the auditor can vet these informal controls with inquiries, observations, inspection of documents. In other words, risk assessment works even in smaller entities with informal control systems. SAS 145 also offers new guidance on maintaining professional skepticism. The standard contains several key provisions that are designed to enhance and emphasize an auditor's professional skepticism. The provisions include the idea that understanding the entity and its environment, including the reporting framework, is a key foundation for maintaining professional skepticism. It also highlights the need for auditors to maintain professional skepticism during the engagement team discussion phase. This includes encouraging the audit team to avoid performing repetitive and predictable procedures year after year. The new standard also incorporates a new so-called stand-back requirement. At the end of the risk assessment process, auditors are now required to pause and evaluate the completeness of their identification of significant transactions and risks. The point here is that the auditor first focuses on significant classes of transactions, account balances and disclosures, and then the remaining material amounts. For instance, if you choose cash and receivables as your significant areas, but not fixed assets, in the stand-back phase, you'll ask yourself if fixed assets deserves additional audit scrutiny. And if it does, the auditor would then plan additional fixed asset audit procedures. The final area that I'll be covering is on the standard is related to revised requirements for the auditor's documentation. And what kind of standard would it be if it did not result in additional audit documentation? Most notably, SAS 145 revises the audit documentation specifications to include the following new requirements. Documentation of the evaluation of the design of internal controls and the determination of whether such controls have been implemented, the rationale for significant judgments made regarding the identified and assessed risk of material misstatement, and of course, the auditor should document the steps they took with regards to all the new requirements and guidelines that we've covered so far today. And what is the criteria for determining whether risk assessment documentation is appropriate? As in the past, it's whether an experienced auditor with no previous involvement with the audit understands the nature, timing, and extent of risk assessment procedures taken. So document the rationale for your risk assessment work and your conclusions. That brings us to the end of the risk assessment section of SAS 145. Next, we're going to go into another polling question, and then I'm going to turn it over to Mac Lillard, who will cover the information technology side of the new standard.
All right, so here's our second polling question. Does your organization have a detailed information security policy covering all information technology general controls? A for yes, B for certain controls are documented but not all, C for no, and D for unsure. Please take a moment to now answer. While participants are submitting their answers, I'll provide the second CPE word. The second CPE word is audit. If you want to receive CPE credit, please jot these words down because you will need them for the survey following the webinar. Again, the second CPE word is audit.
All right, well, it looks like these numbers aren't too surprising. For those of you who answered yes, that's great to see. Very happy that you've been proactive in documenting those controls. For those of you who answered any of the other items, that is kind of par for the course. That is what we're seeing a lot throughout all industries is, with all the changes that have gone through since COVID in the last couple of years. Lots of organizations have kind of put updating their policies and procedures to reflect the new operating environment and the new platforms and technologies leverage that's kind of been placed on the back burner for a lot of organizations. So I'm going to talk a little bit about the importance of an information security policy and making sure that all those ITGC or IT general controls are formally documented in some sort of policy and procedure manual. So with that, jumping into the next slide, I did just include a direct link to the guidance here since everybody will be getting a copy of the webinar slides. I've also included some references in case you would like to look at these specific IT components of the guidance. But right now, I just wanted to take some time to walk through the IT component of SAS 145. Here, I've highlighted just a few high-level summary items, and I just wanted everybody to take away. And I know we've got sort of a mixed audience today in terms of auditors and auditees, so I'm going to try to approach this from both sides of the aisle. But in the simplest terms, what the new guidance means is that auditors are going to be allocating more time towards assessing the risk of material misstatement to the financial statements as it relates to the organization's IT infrastructure. So depending on the organization's size and complexity, there may actually be detailed procedures over IT general controls tested as part of the financial statement process. So just to give you an idea of some potential tests, this could be something like reviewing access controls to the accounting system and financial platform via screen share, meaning an auditee would actually go into their accounting system while on a screen share with the auditor and walk through the process of performing a review of those access rights to make sure that the two or three people that have administrative rights are the only individuals with the administrative rights, and everybody else that have access to the accounting system or financial platforms have the appropriate level of access based on their job function. Another example, if your organization has on-premise servers, we may actually request proof of the most recent backup and actually observe the testing of that backup. That is, unfortunately, something that we run into pretty regularly with our clients is that they're doing daily, weekly backups, so they're not actually testing them. So in some cases, there are issues or errors due to new patches or certain updates that have been made to the systems that's actually resulting in incomplete backups being completed. So if you're not testing those, that actually creates a huge liability. If something is to happen when you try to restore your data, it may actually end up only being partial. So making sure that you're appropriately testing those is extremely important. If your organization's a cloud, or if your organization leverages cloud-based platforms in which you're leveraging a third party to back up your information and make all of that data readily available to you, this may not actually apply. So the reason I bring that point up is, in terms of the testing that may be performed as part of the financial statement audit, it's really going to depend on your organization's context, what systems you used, what cloud-based platforms you leverage. So again, that's really going to vary from client to client. At a minimum, auditors are going to be requesting that documentation over ITGC that covers all of the controls designed and implemented, similar to how we've always requested an accounting manual as part of the financial statement audit process. Clients will now be expected to produce an information security policy that covers all of the controls that are implemented across the organization to protect its data and digital assets. On the next slide, I'll go into some more detail on that, but I did just want to note that the guidance doesn't require a particular framework. However, it does make references to COSO 2013. So that is something that we always recommend to our clients, is that in terms of just if you're really starting out on your IT or cybersecurity journey and really starting to be more proactive, we recommend you select a framework to benchmark yourselves against, get an idea of where you stand. COSO is great for any US-based organizations, anybody who's operating domestically within the US. ISO is also great for any INGOs or organizations with more geographically dispersed operations. That's actually the framework that GRF typically benchmarks our clients against. There's a lot of other frameworks out there. There's NIST, there's CIS. NIST actually, or ISO actually has a map to NIST just to show some of the similarities there, as well as, it actually has a map to CMMC. So ISO is applicable to government contractors or becoming more relevant to them. NIST is also more applicable to government contractors and organizations that receive funding or work with the Department of Defense and certain other government agencies. But again, if your organization hasn't selected a particular framework to benchmark yourselves against, I would recommend that as a starting point. But jumping into the next slide, I really just wanted to go through some of the most important controls that as an auditor, we would hope to see outlined within the information security policy or the IT manual. And if you're an auditee, this is something that, if you're looking at your information security policy and you're not seeing these modules within there, you're not seeing detailed information about these are things that I would kind of jump to the top of my list in terms of things that we need to update and consider incorporating into our manual. So starting with access controls, this is physical and logical controls, physical being those restricting access to hardware, physical assets such as desktop computers, laptops, keeping the physical server room locked or keeping things in a locked IT equipment closet or cabinet, whatever that might be. And then logical access controls really focus on restricting access to the systems, such as having detailed password parameters, using multi-factor authentication, single sign-on, and really go into granular detail over the process for granting, terminating, and monitoring access rights to the accounting system, as well as other financial platforms and any of the other systems utilized by the organization. Backup storage and retention. This will be pretty straightforward for organizations that are heavily leveraging cloud-based accounting systems, because you're really relying on those third parties to ensure the confidentiality, integrity, and availability of your organization and your clients' data. So any procedures that are performed internally or even by an outside party should be captured within that manual. Incident response goes into detail over how the organization will respond to a particular incident. So this policy helps to ensure that all employees know how to respond to and report activity. In particular, ransomware is a huge risk right now, so it's important for the organization to have a policy as to how you would respond to a ransomware attack, what dollar amount you're willing to pay in order to receive your information. It would also outline the contacts, who the organization should reach out to, sort of in a prioritized list. A lot of times, the first person you want to reach out to is your insurance carrier that you have a cyber insurance policy for. You may also want to reach out to law enforcement. The FBI will sometimes provide advice as to whether or not you should pay a ransom. But again, just having that documented so that every employee within the organization knows how to respond to a breach, knows who to contact, who to reach out to, and if necessary, also want to notify the general public if this does in any way affect your stakeholders. If you're required to be compliant with GDPR, there are very strict requirements as to when you need to notify the general public of a breach. So this would be something that would be captured within your incident response plan. Going on to third-party risk management, this is very big nowadays, now that a lot of organizations are leveraging those third parties for cloud-based platforms, or you're also leveraging a third party as an IT consultant or a managed service provider, and they're taking over a lot of the operations, or they're actually implementing a lot of controls on behalf of your organization. So this goes beyond just the normal vetting, what are you doing before contracting in a relationship with them, but what are you doing on an ongoing basis to monitor and evaluate their performance? Are you performing employee satisfaction surveys to make sure your employees are happy with the level of service? Are you performing an evaluation of the vendor's performance against the service level agreement to ensure that they're acting in accordance? Are you doing background checks such as OFAC, reviewing SOC reports? That's one that we typically recommend to all of our clients, just because SOC reports, if the organization undergoes an SOC audit, they should be willing to turn those over to you. And that would identify any glaring deficiencies, any issues that they have in regards to how they protect your organization's data. And again, anything in there that jumps out at you might, again, be something that ultimately affects your decision as to whether or not you review a contract. Another big thing is actually reviewing key financial metrics over your vendors, or particularly if it's not, a Salesforce or an Oracle NetSuite. If you're using a smaller vendor that may have financial viability concerns, you would want to review those key financial metrics because, again, you don't want to run into a situation where you're leveraging a third party significantly for certain aspects of operations, and then all of a sudden that entity goes out of business or goes under for whatever reason. We are in hard economic times right now with kind of a looming recession. So reviewing those key financial metrics to make sure that all of your vendors are financially stable, also very important. Privacy, this is typically a publicly facing document available on your organization's website. So ensuring that this is reviewed and approved annually and updated demonstrates your organization's commitment to your stakeholders' privacy. And in some instances, lack of a privacy or the presence of some basic boilerplate privacy can also be an indication to hackers that look at your website, because that would demonstrate that your organization may be unsophisticated from an IT perspective and may actually make as a viable target. So again, the privacy policy should be in accordance with any regulatory requirements such as GDPR or California privacy, if that applies to your organization. There's also a lot of upcoming privacy regulations, specifically for Virginia, where I live and a lot of our clients are located. There's a Virginia specific privacy policy that goes into effect January 1, 2023. So making sure that your organization is just staying on top of that and understands how this could in any way impact your controls, your policies, procedures, or your operations is also very important. Business continuity and disaster recovery. Disaster recovery is sort of the IT subcomponent of business continuity, and this will center around prioritizing all your critical systems and processes based on their predetermined minimal acceptable downtime. So, for example, most organizations can't operate with their financial or their accounting system or their CRM system, for more than 24 to 48 hours. You're going to lose revenue, you're going to lose data. It's going to take time to get back up and running and to input that data. So that's one of the systems that you would want to focus on restoring access or operations as quickly as possible. Whereas maybe your marketing platform, because you only send out quarterly emails, maybe that can be down for 30 days. So this way you have a systematic approach to addressing a cyber breach and making sure that you're restoring your critical platforms in the most sensible manner possible. Lastly here, cyber insurance. This isn't something that necessarily your company will design, but this is a policy that your company should obtain through an insurance provider. Being able to actually provide proof of these detailed policies and procedures should actually help to drive those costs down. Cyber insurance, unfortunately, has increased in its costs, especially as a result of COVID. A lot of fraud is being carried out via digital means. So accordingly, those cyber insurance costs have gone up. And then also being able to provide proof of these next two bullet points, an annual cybersecurity assessment or robust training program, will also help to reduce those cyber insurance costs. So an annual cybersecurity assessment, we do always recommend that all of our clients perform something at least on an annual basis. And this is going above and beyond just the normal ongoing monitoring that you might do over your network or firewall or something that your managed service provider would do for you. This would be something a little bit more in-depth, whether it be an external scan using open source threat intelligence to look at potential vulnerabilities from an external perspective. This could be an internal scan, looking at any sort of deficiencies or patching issues on your hardware, your servers, laptops. This could be a full-on penetration test. Again, it's going to depend on your organization. A lot of our clients are INGOs and nonprofits with IT budgets from a few $1,000s to tens or hundreds of thousands of dollars. So understanding what's right for your organization and trying to determine what the appropriate frequency is, whether it's semi-annual, annual, whether you do it on a rotating basis, say you do penetration testing 1 year and the next year you just do an open source threat intelligence external scan to balance that level of effort and balance the associated costs with those assessments. Again, it's going to depend on your own organization's context and what you feel is your overall level of risk as it relates to your IT environment. And the last bullet point here just covers training. At a minimum, organizations should have an onboarding training that's going to cover your policies and procedures, customized training over platforms relevant to the employee's job functions and cyber best practices, such as identifying red flags for phishing emails. If your onboarding training doesn't incorporate that, you should update that to address phishing. That is the main way that organizations do suffer a breach, is from some sort of phishing email, somebody clicking on a link, and then a perpetrator gets access to the systems. And then building on that, you provide an annual refresher training to cover a lot of those areas covered during the onboarding training, but also addressing emerging issues. And again, hopefully kind of drilling in some of those phishing best practices. That annual refresher can also include information from management as to, again, the perceived level of risk. So anything that management has identified as a top risk to the organization, should also be included within that annual training. This just creates a more risk-aware culture. It demonstrates to employees that there's a strong tone at the top for cybersecurity and proper management of the organization's IT assets. So it goes above and beyond just training your employees. It really sets a more risk-aware culture for the organization. If feasible, your organization should also consider using ongoing phishing simulations. That is kind of one of the lower cost but highly effective controls or practices that we see amongst our clients. Phishing is the #1 cause, again, of cyber breaches, which makes end users ultimately the highest risk to the organization. So ongoing phishing simulations can further enhance that culture of risk awareness and really helps to drill in some of that information over how to identify red flags and ultimately how to properly report that to your IT department or managed service providers so that these types of emails aren't making their way through to other employees within the organization who may not be as well trained over how to identify these emails. So jumping into the next slide, I did just want to talk briefly about communicating some of these things to the board. As SAS 145 goes into effect for fiscal years ending after December 15th, 2023, there's plenty of time to educate the board, your staff, and get the organization up to snuff so that once this goes into effect, you don't have to skip a beat. So educating your board on SAS 145 and what this means to them, how this could in any way potentially affect the financial statement audit and potentially even result in auditor comments, making sure that they're educated on this and that they're aware of what needs to be done by the organization to ensure that ideally your auditors don't come in and have to issue any of these management comments. This may require budget allocation. That's going to require board approval. So making sure that they understand the implications of this new guidance as well as what it means for the organization is very important. Focus on giving them a high-level overview of the process. Everyone's kind of IT savviness and their level of knowledge and expertise in this area varies. So you want to make sure that you're focusing on the highest risks to the organization, the critical initiatives that are ongoing, and making sure that you're avoiding any kind of technical jargon or getting too granular. So one of these ways to do this is really just leverage the existing meetings. You don't need to set aside an entire hour or something to talk about IT, but make sure it's a recurring agenda item at all board meetings. So this is going to be captured in the minutes and it's going to be followed up on as you go through each board meeting. What are the critical initiatives that the organization's doing in terms of undergoing a cyber assessment, updating policies and procedures, and what are the areas of highest risk that have been assessed by management? And then lastly, if you have dashboards available, this is one little snapshot of a dashboard that we use, just provides a very simple grading mechanism. You want to be at an A, you don't want to be at an F. So if you do have the ability to provide those through your managed service provider, through your insurance carriers actually do run scans like this on their clients on a regular basis, just to make sure that they don't pose any significant risk. It also helps them in pricing out their policies. So this might actually be a technology that's readily available through your insurance carrier. Lots of banks also provide this for free. So if that's not a conversation you've had with either of those entities, would definitely recommend reaching out to them to see if there's anything that they can provide or assist with. But with that, I will turn things over to Max to talk a little bit more about the compliance supplement.
Okay, thanks, Mac, and good afternoon, everyone. For the next section of the presentation, we are going to do somewhat of a high-level overview of the 2022 Compliance Supplement, which was released back in May of this year and applies to audits for fiscal years beginning after June 30th, 2021. So if you're an auditor and you have any June 30, 2022 or later year-end clients that are subject to single audit, you will want to be familiar with these updates and make sure you are consulting the 2022 Compliance Supplement as you perform those engagements. As a reminder, the Compliance Supplement is a document published annually by the Office of Management and Budget, and it's primarily designed to provide guidance for auditors that are performing those single audits, but it does also have a lot of information that can be useful for auditees as well. If you're an auditor that's performing those single audits, you likely are already intimately familiar with this document. If you're a nonprofit, you may or may not be familiar with it, but in any case, it is a critical reference for auditors and also a useful tool for auditees. So in terms of what we're going to cover for 2022, the most significant changes pertain to COVID-19 funding. There's some implications on risk assessments for programs that receive COVID-19 funding, clarity on funding that qualifies as COVID-19 funding, and some other specifics that we'll get into. The compliance supplement does devote an entire section in Appendix 7 to audit advisories. So we'll touch on some of the key topics addressed there, and also just go over some other relevant single audit topics and reminders as we move forward. So when we talk about COVID-19 funding, the 2022 supplement clarifies that this is specifically funding that is derived from the 5 pieces of legislation you see here listed on this slide. So when you're looking at your preliminary schedule of expenditures of federal awards, you do need to be aware that funding from this legislation can be included into existing assistance listing numbers, or the funding may be classified into a new assistance listing number. And just as a quick aside, when I say the term assistance listing number, this refers to what we previously called a CFDA number. Going forward, we do all need to get used to using the term assistance listing or AL number in place of CFDA number. So now the agencies are required to specifically identify COVID-19 awards. So in theory, the award documents themselves should clearly state whether your award was in any part funded by COVID legislation. But if you want to take it a step further, the appendix of the supplement does have a list to a complete list of assistance listing numbers that may potentially receive COVID-19 funding. It's a big list. There's over 200 different AL numbers there that are eligible. So do be aware that this funding affects many programs, and you really do need to look through those agreements to look for indications of COVID funding. So to continue with this discussion, when last year's supplement came out, it was indicated that programs that did get the COVID-19 funding are considered to be higher risk by the federal agencies. But it is important to keep in mind that just because the agencies consider the programs to be higher risk, that is not the same thing as saying that you must assess them as high risk programs for your audit. So we'll get into that in just a minute. But first, on this slide here, we have a list of programs that are considered to be 100% COVID funded. This table is available in Appendix 7 of the supplement. So again, when you're reviewing your CFA, it would be useful to refer back to this table, check it against your AL numbers, just to potentially identify any COVID funding that you may have. So what does it mean if a program is considered high risk by the federal agencies? Well, often that does mean that if you have a type A program or a cluster of programs that includes COVID funding, it will end up being a high risk type A program and therefore will need to be audited as a major program. But however, that is not always going to be the case. There are 2 criteria that can provide for a low risk assessment on a type A program, even if that program is considered higher risk by the federal agencies. So you do need to meet both of the following criteria to have a chance of a low risk assessment in that case. First, the program must otherwise meet the criteria for a low risk type A. So it was audited as major in at least one of the past 2 years. And during one of those 2 years, there were no material weaknesses, opinion modifications, or question costs in excess of 5% of the program expenses. Secondly, the percentage of COVID-19 funding in your program or cluster must not be material to the program as a whole. So for example, if your program has total expenditures of $1 million, you set materiality at 5% of total expenses. For you to have a chance of assessing the program as low risk, the expenditures under COVID-19 funded awards would have to be less than $50,000, less than your materiality threshold. If the type A program is 100% COVID funded, such as the ones that were listed on the previous slide, you then are required to assess the program as high risk and audit it as a major program. So I think there really is a clear indication here that OMB and the federal agencies are wanting that COVID funding to be audited. They are clearly skewing the rules such that there is a greater chance that these programs will be subjected to audit. So just a couple more things to mention here. The rules we just talked about do not apply to research and development clusters. Inclusion of COVID funding in an R&D cluster does not create a high risk designation. And it also doesn't apply to type B programs. Even if you have a 100% COVID funded program, if it is type B, you still apply the normal risk assessment criteria. You take into consideration that the agency is considered high risk, but that's just one of several things to consider. So there are going to be some additional COVID related topics that we'll talk about a little bit towards the end. But for now, I want to go ahead and move on to part 2, which is the matrix of compliance requirements. So this is a section of the supplement that identifies various programs, associates those programs with compliance requirements. And just as a reminder, once you've gone through the major program determination, you've picked your programs to be audited, the next step is to consult this matrix and see first whether your program is included in the supplement, and then if so, identify which compliance requirements are subject to audit. Overall, not too many changes this year. There are new programs in the matrix. They are identified with asterisks. And then any changes to the applicable compliance requirements are going to be highlighted in yellow. Again, minimal changes. Only 7 programs did have changes to the compliance requirements for 2022. And the way the matrix works, just as a refresher, is that if your program is included in the matrix, it will have a yes or no next to each of the 12 compliance requirements. If the requirement is marked with a yes, then it is potentially subject to audit. But do keep in mind that only requirements that are direct and material need to be audited. So for example, your program might have a yes under procurement, suspension, and debarment, but if there were no major procurements conducted under that program during the year, the requirement would probably not be direct and material, so you would not need to perform any audit procedures. And then also keep in mind that the matrix is really just a starting reference point for determining those direct and material compliance requirements. You still have to look at the terms and conditions of an award, which may indicate that a specific area is material, even if the supplement does not mention it. I think a good example might be if a significant portion of your award is passed through to subrecipients, but the matrix says subrecipient monitoring is not applicable. You still might decide based on your judgment and the risks that you want to go ahead and look at subrecipient monitoring anyway. So you do have some discretion there. And final word here, beginning in 2019, the federal agencies can only specify 6 compliance areas as subject to audit. So you really are not going to be hopefully auditing more than 6 compliance areas for any given program. Moving on to part 3 of the supplement. This is around detail about the 12 individual compliance requirements, provides guidance about them, suggests audit procedures. Overall, there were really minimal changes to this section as well. The most significant is around reporting requirements, specifically performance recording. Overall, the OMB is really guiding auditors towards conducting more procedures around performance reporting. And ultimately, they're going to try to get us to a place where auditors are essentially conducting more performance audit procedures as opposed to compliance procedures, sort of transition the single audit from a compliance testing exercise to more of a tool to ascertain information about program effectiveness. So more of a long-term goal. For now, if your program does require testing of performance reporting, you only have to perform detailed testing if there's what they are calling key line items that are quantifiable and capable of evaluation against objective criteria. An example might be, reaching a target number of beneficiaries. If an organization reports that they have provided assistance to 500 beneficiaries, then they should have documentation to substantiate that those beneficiaries were in fact reached. But in the absence of any of those measurable criteria, the audit testing is really limited just to making sure that those reports are submitted timely. And in any case, as an auditor, make sure you document your conclusion around the procedures that you've elected to perform on performance reports. So moving on now, we're going to talk about the audit advisory section of the 2022 compliance supplement. To circle back on some additional COVID considerations, the supplement does have discussion of donated personal protective equipment. Suffice it to say, if it is available, the value of any donated PPE that came from federal agencies should be reported in a separate footnote to the CIFA, but it does not count towards major program determination and is not required to be audited. The advisory section also provides guidance about some of the reference documents that agencies publish around their COVID programs, essentially saying that, yes, these are useful things to consult when you're doing your audits, but if you do have a finding related to any COVID funding, do make sure that you reference the actual statutes, regulations, and award terms and conditions when you're writing those findings. On the next slide, I do think it's useful to kind of revisit how the COVID awards need to be presented on the CIFA in the data collection form. It is a requirement that COVID awards be identified separately. So we have a couple of examples here. For the CIFA, let's say you have a program that's partially COVID funded and partially not. You would then need to have 3 lines on the CIFA to show that funding. For the COVID portion, you will include a prefix of COVID-19 followed by the AL number and the expenditures of that COVID funding, then a line with the same AL number and expenditures that are not COVID-19 funded, followed by the total line If your program was 100% COVID funding, you could, of course, show that on a single line and include the prefix. The data collection form is really very similar. You do need to report on a separate row by assistance listing number, any COVID funding, and include that prefix. Really, the only difference is on the data collection form, you would not need to show the total row for that program. So moving right along on the next slide, again, federal agencies are responsible for identifying COVID awards to recipients and communicating those requirements. But that obligation does move on to pass-through entities. So if you are subawarding COVID funding to another organization, do make sure that you communicate to that subrecipient that the award includes COVID funding and any requirements associated with that. So to touch on, a couple other audit advisories, the OMB does provide some COVID recipients with the ability to go through an alternative compliance examination in place of a single or program-specific audit. The idea there is to reduce the administrative burden because there are a lot of organizations that have historically not received very much federal funding. They're not familiar with single audit, and also to provide relief for the audit practitioners because there are quite a number of requests for these compliance audits going on presently. So in certain cases, there are organizations that may be exempt from doing a full single or program specific audit. Details about that can be found in Part 4 of the compliance supplement. So let's go ahead and move on. Do want to say a quick word about the status of the single audit submission extensions, which we can go ahead and move on to the next slide. So we were all very fortunate that we did have the submission extensions for the first couple of years of the pandemic. Unfortunately, despite quite a bit of lobbying by the SAS CPA, OMB has stated that there will not be any additional single audit submission extensions going forward. So June 30, 2021 year ends are actually going to be the last ones to have that 6-month extension. Those audits are due by September 30th of this year. And this does create sort of an odd situation where your September 30, 2021 year end audits are actually going to be due before the June 30, 2021 year audits. Those September year ends were already due on June 30th of this year. And for your calendar year ends, you're going to be back to the normal cycle of those being due by September 30th. So as we come kind of to the end here, just a few more considerations when you go through your single audits. In light of all the COVID funding that is being audited, there have been increasing needs to refer to AUC 805, which is the standard that provides guidance on audits of single financial statements. This is especially relevant if you are performing a program-specific audit, so you would want to consult with that standard. And also, as you go through the audit process this next cycle, it is expected that there are going to be more findings than normal due to the new requirements, differing requirements for the COVID funding. Potentially, there's going to be some less experienced auditees out there that are receiving this funding. So there's going to be more oversight from federal agencies, both on auditees and more scrutiny on the audit reports. We have had some feedback recently from the agencies per their review of single audit reports that have been submitted recently. Their observations are that they are seeing discrepancies between CFAs and the data collection forms. So very important as part of your review process within your firms, make sure you have a person with appropriate knowledge and experience to review those documents, make sure that information matches up, everything is filled out correctly. I'm going to pause here for our final polling question before we wrap up.
All right, so for the last question, has your organization received any COVID-19 funding? Or if you are an auditor, have you audited any COVID-19 funding? A for yes, B for no, C for unsure. Please take a moment to now answer. While participants are submitting their answers, I'll provide the third CPE word. The third CPE word is agency. If you want to receive CPE credit, please jot these words down because you'll need them for the survey following the webinar. Again, the third CPE word is agency.
Okay, so it looks like the majority of respondents indicated yes, that they have received COVID funding, which is good. It's good that you're aware that you have that funding. It'll be interesting to see going forward if those programs get selected for your single audits.
All right, we would now like to take some time to answer some questions that we have received from the audience.
And yeah, Max or Mike, sorry, I'll jump in and just take one of the questions that somebody sent to me. This is also a question I face a lot, just as I have these IT and risk management questions. I alluded to this a little bit during my speaking portion, but the question was essentially, if my organization leverages all cloud-based SaaS and we don't really have any internal IT personnel, we actually just leverage external consultants, do we still need these detailed policies, procedures? The answer is yes. Even if you're leveraging external parties for all of your IT functionality, they're taking care of access control, backup, disaster recovery, incident response. They cover anything and everything. You should still have internal policies and procedures that reflect what that third party is doing on behalf of your organization. So regardless of the infrastructure, how you leverage third party consultants, whether or not you're using on-premise servers or cloud-based technology, you should have an internal set of policies and procedures that reflect those controls implemented by the third parties, as well as anything you do internally that's outside of the purview of a managed service provider or an IT consultant. So that's all. That's a long way of saying, yes, you do still need those details, policies, and procedures.
All right, thanks, Mac, for the answer. With that, we'd like to thank everyone for attending today's session. We encourage you to follow us on social media at GRF CPAs and visit our website at www.grfcpa.com for upcoming events and alerts. Please remember to complete the survey that will appear automatically following the session. If you'd like to earn CPE credit for attending today's session or today's discussion, thank you again and have a great day.